Uber reported another great quarter in the second quarter and a really interesting conference call from their team before the market opened on Wednesday. I think they've got a really clear vision for how they're going to win in autonomous driving with more autonomous vehicles coming to market. They are trying to either fund a whole bunch of suppliers or just make sure a whole bunch of suppliers survive because they want to commoditize that supply of autonomous vehicles. That's the way to think about their entire business and their entire strategy. That is the opportunity for Uber. So let's go through some of the numbers and show exactly where they're making that investment in autonomous vehicles because that is a core to my thesis in owning this stock. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the earnings presentation. And they talked a lot about the design of the app, Uber One, cross-selling, being able to be more than just a mobility platform. Are you going to combine the mobility app with the Uber Eats app? A lot of those things are just kind of details. I think management will figure that out as we go forward. Where things really got interesting was a lot of discussion about autonomous vehicles. And this is something that has been playing out for the entire year. Earlier this year, they gave a good presentation on how they think about this market playing out, the suppliers that they could potentially use. Remember, Uber is a company that's going to be able to leverage autonomous vehicles and that being a both abundance of supply and potentially even lower cost supply when they don't have to actually own or develop any autonomous vehicles. Lots of different ways that they could go in the future. But 20 partners, 12 cities that they are working to develop in 3 countries, 5 more cities in 2025, and then all kinds of different mobility storefronts. White labeling Uber, I think this is going to be really the key. This slide right here is the future of the company. But what they reported was the financials for the core company today. Active riders up 15% from a year ago. Trips up 2% for each rider. So trips in total up 17%. Gross bookings continues to grow, up 18% from a year ago. This is going to be a proxy for basically how much volume is going through the system. But Uber does not take all of those bookings as revenue. They share that revenue with their drivers. That's why you see their revenue is lower than their bookings, up 18% from a year ago. Adjusted EBITDA, again, the company's now profitable. So these numbers are starting to look better and better. Over $2 billion in quarterly adjusted EBITDA, up 35% from a year ago. So that's the operating leverage that's taking place in the business. So we break it down by segment. This is their mobility business, up 18% from a year ago. This is coming down. Remember, the growth numbers are comps from a year ago. So we are coming out of kind of a low during the pandemic. That's why some of these 2024 numbers even were really, really high growth rates. We're not going to see that forever. You do want to see that mobility be double-digit growth, but it's not going to be 20 plus, but 30% plus growth. So you can see adjusted EBITDA. Most of their adjusted EBITDA is going to be coming from the mobility business right now. Deliveries up 20% with revenue from those deliveries up 23% and adjusted EBITDA pretty solid at $873 million. Freight, pretty small business. I'm not even going to talk about that much. The balance sheet. It's worth going over the balance sheet because they also announced as part of this deal or as part of their earnings, a $20 billion buyback program. Now, as I'm recording, Uber has a market cap of $187 billion. So that's going to be a little over 10% of shares outstanding. They're not going to complete this overnight. So depending on what the share price does, could be a little over 10%. And they don't have the cash to do that right now. Current cash on the balance sheet, including short-term investments, is about $7.4 billion. They do have some restricted cash and restricted investments as well. This is their minority stakes in a lot of other companies. And what they said in the conference call is as they sell those, they're going to actually reinvest it. So the money for the Lucid Neuro deal, for example, is going to come from selling investments in other companies. Where they're going to get that buyback money is just funds from operation. Now, this is their press release for Q3 2025. They're expecting gross bookings to grow to $48.25 to $49.75 billion. Again, up about the same as this quarter, 17 to 21%. And adjusted EBITDA expected to grow even more than that, $2.2 to $2.3 billion. Again, that operating leverage in Uber's business continues to be really strong. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So the big discussion on the conference call was, what does the autonomous strategy look like going forward? Are you going to have all these partners? Who's going to own vehicles? All of those kinds of things. And I thought it was really interesting. They did talk about multiple different models that they have going forward. They could essentially rent autonomous vehicles for a fixed fee for the day. And then it would be Uber's responsibility to basically make sure that that vehicle is used as much as possible. One of the things that we've seen with Waymo and their partnership with Waymo and the data that we've seen from Waymo vehicles operate far more than a traditional vehicle. I believe there's 24 rides per day that they're able to complete. Uber's stat that they gave today is that a Waymo vehicle is more efficient or does more rides than 99% of drivers. That makes sense. If a driver goes out and drives for an hour or two, they're not going to be able to complete as many rides as a Waymo is, which is available almost 24 hours a day. So those numbers start to make sense. But it's interesting that that could be a potential business model, that a fleet owner or a finance company could just say, okay, we'll buy the vehicle, you rent it back from us, and that'll be the business model behind it. So you end up having that vehicle being a variable cost, but sort of a fixed variable cost, if you will. Another option is to have a fee structure similar to what we have today, where they're going to get a per mile revenue stream. That could be vehicles that are owned by fleet owners or, again, finance companies. And then it's also possible that Uber could just own those vehicles. I don't think that's probably likely the case. But interesting that there's multiple options for them going forward. They are going to be continuing to fund some of these companies that are developing technologies and manufacturing to make sure that there is ample supply of autonomous vehicles. Remember, Uber does not want to be reliant on one company or one supplier in autonomous vehicles. They want a lot of different suppliers. And what we're going to see is multiple suppliers hit a safety threshold and a manufacturing cost capability where this is a viable product. And basically, once you hit that safety threshold, and you're not having accidents, you're not killing people driving, then you've sort of met that bar. This is not going to be the kind of product that getting 90% better from almost perfect is going to be worth spending billions and billions of dollars. So once they hit that level of efficacy, if you will, that's going to be where autonomous vehicles are really going to take off. I think the next big trend is going to be those costs coming down. That's going to happen as more and more companies get into manufacturing level 4, level 5 autonomous vehicles. That's going to take a couple of years, but Uber is going to still be the point of contact for most riders. And that's really the company's value proposition is, sure, you can be an autonomous vehicle manufacturer, technology company, but we're going to connect you with the demand for those vehicles. That is the bullish case behind Uber. I think that is well intact. Management really has a clear vision of what the future of this company looks like. One that I'm happy to own. And if the stock continues to pull back a little bit here, happy to add more. But let me know what you think about Uber's earnings report in the second quarter. Leave your thoughts in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.